Diving into the pure technical structure of this stock, we are now beginning to tap the 50 monthly moving average, and it has been defended 3 times with additional major reactionary highs, and we are, which would call, within a standstill, waning of momentum within the technical aspects. Long traders want to hold this key transitioning point with a solid monthly breakout candle close right up above to issue in an additional buying spree to go on to re-challenge those new major reactionary highs from 2021. And zooming into the weekly, beautiful inverse head and shoulder classic looking bottom split of the neckline with a solid big breakout to overcut its 200 exponential moving average, back tested it, and here we are testing the 200 weekly moving average, and that is gearing up for a pivotal moment within the technical momentum indicator realm. Momentum is beginning to wane in a choppy, persistent consolidation, and I believe that could be beginning stages of a potential divergent high with negative off a beautiful bearish rising wedge pattern. And for that would be the significance of divergences that continue to build with confirmed crossover in the price percent oscillator. Make no mistake about it, here on the weekly time frame, momentum is beginning to wane. Zooming into the daily interval, and these are some key targets to hone in on, especially if and when some of these key transitioning points are broken with conviction. We have 3 unfilled and unchecked gaps waiting down below, and that could be a very significant telling point for how it is addressed as a magnetized event scenario if and when some of these key technical levels are once again broken with authority, with negative and divergences and bearish divergences that have continued to construct and establish since July of 2023 on all key technical momentum indicators. That has only continued to transpire and grow on a much larger scale here with the near-term negative divergences in both the RSI and price percent oscillator and the oscillator histogram beginning to wane their hillsides, and already a negative print below its zero line threshold. You have a huge volume sell spike here on beginning stages of July, and momentum and decline in volume has beginning to persist on a much lower rate there. And once again, I believe this is our big telling point off the 50 exponential and 50-day moving average in correlation of this major, big primary reactionary uptrend line off the March 2023 major reactionary lows. And there is a ton of major reaction across that entire sphere. Short sellers, bear traders, they want to see a solid, big breakdown red candle effect down below the 124.93 price resistance. And that would issue in a definitive solid close breakdown sell signal, only increasing the odds for an additional bigger move to come on a potential backtest and or retest. Would additionally add on to your existing short trade position down to the first target at 111.67 for a 12.8% crash, target 2 at 165 for a 21% crash, and a complete backfill the gap down to gap support at 87.02 in confluence of its 200 exponential moving average for a 31, call it a 32% crash at the downside, and the risk reward favor the short seller in really either direction, both from a fundamental catalyst perspective. You have earnings, the upcoming Q2 on the 31st of August. Never underestimate how rapidly the situation can shift where there's a significant volume at price indication where most people have traded and invested heavily in the price, where at any moment, everything can change in an instance, where the police crash a party on Wall Street. And when that happens, chaos will erupt as more traders realize the party has come to an abrupt end.